Alright, hello and welcome to Camel Finance. I'm your boy Camel, and as promised, here is the second video of the day following the CPI print. So if you haven't seen the data, here it is. I'll put it in the description and or the comments below as well. So US CPI, month over month, 0.1%, which is above the forecast of -1% and above last month. The year over year, and this is one of the key ones, 8.3%. So that is above forecast. However, that is indeed below last month. So it's not as low as I would have liked to have seen it, but it is still below last month. It starts to get a little bit more complicated when we get into the core data. So core is essentially CPI minus the food and energy. And 0.6% increase month over month. So that is above both the forecast and the previous, as you can see. And this is the painful one here, 6.3% year over year increase, which is above the 6.1% forecasted and above the 5.9. So a bit of a mixed bag. This is kind of difficult to digest for the market. And if I just show you a clip here, I did a little screenshot for you. This is how the NASDAQ reacted. This is a 15-minute chart. And as soon as the news came out, as you can see, it just fell off a cliff. So it doesn't look too bad. And I'll get to the charts in just a second. But the NASDAQ did not enjoy this hot print, or what it interpreted as a hot print. I guess the core is indeed hot. It's above where we expected it to be. However, the CPI, including the food and energy, is 8.3%, which was below last month. So that's the data. The treasury yields have surged as the hot CPI print, this hot core, of course, low CPI, is likely to keep the Fed aggressive in raising rates. One thing we know for sure is that 8.3% CPI locks in a 75 basis point hike in September. The Fed did kind of communicate that this was going to be the case and not 100 basis points. And Jordan believes this was intentional. That remains to be seen. So as I already said, inflation has fallen to 8.3%. This is CPI, of course. And this is a drop for a second month in a row. So there is some silver lining here, despite core CPI being up. And in addition to this, the inflation of 8.3% is actually the lowest we've had since April 2022. So is there light at the end of the tunnel? Quite possibly. As I've shown you, the chart for the NASDAQ just fell off a cliff. I think that quite possibly that's an overreaction. This will not update until 2:30, which is in about 20 minutes. But that means the NASDAQ is going to open around here, somewhere like down here. I do think that's a little bit of an overreaction, but that remains to be seen. I will be proceeding with caution. I have flagged this over and over and over again on the channel that there will be some big wicks, there will be some stop hunting, there will be market maker games being played all day today, or at least for the first half of the day, the first half of the New York session. So I will be proceeding with caution. I can run through a few charts with you here, but we really need to see how the close works out. I think we can say that the market has got this wrong if we have a lot of downside and then we get a turnaround Tuesday. If we get something like that, then I think longs can still be entertained. But if we just get continued downside for the rest of this week, then it's going to be time to start opening some shorts, likely below this level here. And it's kind of the same for the S&P. But again, I want to stress this. If we just get a deep pullback and then a bounce and finish the week higher, especially a bounce that takes out this high here, and the same is true of the NASDAQ, if we just get a bounce and then take out this high here, and I think that we can say risk on rallies across the board are still a thing. So we need to let the market decide. We don't know. Nobody knows. All we can do is let the market tell us what to do. In spite of all these massive red candles we're seeing in the equity market futures, the VIX is only up at 4%, so this could definitely spike higher. This remains to be seen, but if we don't start getting back up into this range for the VIX, then I would say that quite possibly there is still a lot of opportunity for upside here. So again, I don't know, not trying to predict anything, simply going to let the chart tell me how to act, but we'll be proceeding with caution today. If we'd have had a low CPI print, a shockingly low, not just 0.2% below, and if core had been shockingly low, then I think we could have taken a long on this, as I said ahead of time. But for now, we need to be proceeding with caution. Real looks like it's going to open back down close to our entry, so that's fine. We'll just we've got a nice tight stop. We'll just let this one run and see what can happen. Here you go. Look at oil. It's recovered this line here, right? It's recovered this support, but it's not rallying, and that's because the inflation's not as hot as the CNBC shills want you to believe it is, right? If this was truly a hot CPI print, we would have seen this start to tear, but it hasn't. You know, this is kind of almost looking like it's going to roll over and lose this level again. So again, we'll continue to monitor this. Remember, there's going to be a lot of games played, but I still think that there will be plenty of trades to be put on over this week. This is not a good look for gold, as you can see here. So all the while we're above this low, then this is still a new cycle and there's still a chance to breaking out, but admittedly this is looking weaker and weaker and weaker, and if we lose this red line of support here, which is this one, then shorts have to be entertained. Long-term exposure has to be questioned and protected. Silver, on the other hand, is holding up quite well. So it did have a massive candle yesterday, as you can see, right into resistance. So a little bit of a pullback not to be concerned about in the meantime. If we can do something like this and then break out, then there's no problem for silver. And the same is basically true of the miners, isn't it? So I added another position. Likely that is going to be in a little bit of red once we open up today, but that's okay. Long and strong continue to push. The stop for the whole lot of positions is moved up to here. So we'll see how this goes. Bitcoin looks like it might be dropping into what could be a later cycle low, or this could just be like a breakout retest resumption. So we'll see how this goes. Not to be concerned about until we lose these lows here, these local lows. So all the while we're above those, I think this is bullish. I am currently not long. This is just sort of lined up from a while ago, looking to get long. So I'll be notifying of that as soon as I decide to take a long. But I think I want to see a little bit of a bounce, and then we can entertain longs. Lose this low and shorts become a thing. Ethereum, look at this, failed the retest. So is it going to drop down? I think it's going to follow Bitcoin, isn't it? Again, same as Bitcoin. If we can get a sort of decent pullback and then a bounce, that bounce becomes longable in my opinion, but lose these local lows and I think we have to entertain shorts, particularly if there are problems with the merge. XRP, look at this, perfect retest. So all the while it's above this, no problem, but I think if we lose this, if we start to come back in here, I'll probably just cut this trade and then look to re-enter on a breakout. This is like a hard stop, but I will soft stop this because the whole thesis for this trade is breakout, retest, resumption. So if we lose this level, we'll close that and then repeat the process wherever we break out next. So you can see the dollar is bid. Of course the dollar is bid on the news, but I think that as long as we don't make a new high, then this can still roll over and this is likely going to end up being the top. So it really depends. I do think the market is overreacted a little bit at the moment, but that remains to be seen. And yields are, as you can see, now fully breaking out. So that's kind of to be expected. It's going to put a lot of pressure on risk assets in the short term. Maybe we can line up a double top here, but that remains to be seen. For now, I think proceeding with caution. Got a couple of trades on, looking to put a couple more on later in the week. So that's the update. Peter Schiff had a nice couple of tweets here. I wanted to leave you with this. He says, once again, the market reaction to much higher than expected inflation is wrong. So I don't think it's much higher, but that's semantics. Inflation is here to stay, and it will get much worse despite the rate hikes due to over a decade of inflationary, monetary and fiscal policy. This is very bearish for the dollar and bullish for gold, and by proxy, of course, Bitcoin. What if a year from now, the year-over-year inflation surprises by coming out at 12% instead of 11% expected? Will investors take that as a sign that the Fed is finally going to get tough on inflation and buy the dollar and sell gold? Will 20% year-on-year inflation still be bearish for gold? And of course, Bitcoin. You know, as this inflation problem becomes worse and worse, then what we will see is a flight to hard money, to sound money, such as Bitcoin and gold. So if you found value here today, I'd appreciate it if you drop a like on the video. If you appreciate the work rate, 2 videos in a day, then I'd appreciate it if you could leave me a comment or a like or something like that. I hope you have a wonderful rest of your day. Trade safe out there because it's going to be choppy, but I think tomorrow we'll get the tell. We'll look at the close today, see where we close, and then tomorrow I think we'll have a much better and clearer picture of what to do. So don't force anything. Enjoy the rest of your day. All the best from me. Take care. Cheers. Bye.